Welcome back to the Freedom Escape. If this is your first time here, we're still a new channel, but we are extremely dedicated to bringing you everything happening in global economy and world events. Because we're just getting started, if you find value in what we do, please hit that subscribe button. It really helps us grow this community. And don't worry, this isn't a one-time thing. We'll be posting multiple videos every single week, packed with the latest news, market moves, and everything you need to understand what's really going on with your money. Now let's get straight into this week's biggest stories in global economy. Let's start with the big picture. Global stock markets closed the week on a high note. The S&P 500 and the Nasdaq both finished higher, and once again, the main driver behind this rally was the technology sector, especially companies tied to artificial intelligence. Investors are feeling optimistic right now, but they're not getting ahead of themselves. Everyone is watching two things closely: the next round of inflation data, and the beginning of earnings season for the biggest companies in the world. Markets love certainty, and right now we're in a bit of a waiting game. That optimism could either be confirmed or challenged in the next few days, depending on what the numbers show us. Speaking of numbers, inflation in the United States continues to be the #1 topic on Wall Street. This week, the market is waiting for the release of the Consumer Price Index, or CPI, one of the most important indicators used by the Federal Reserve to decide its next move on interest rates. Here's why this matters so much. If inflation keeps slowing down, expectations for interest rate cuts in the coming months will grow stronger, and when the market expects lower interest rates, that usually fuels more buying in stocks because borrowing gets cheaper and companies can grow faster. So keep an eye on this number. It could set the tone for the entire month. This week also marks the beginning of earnings season, and it's starting with the big banks. We're going to hear results from JPMorgan Chase, Goldman Sachs, and Bank of America. Why does this matter to everyday investors? Because banks are basically a mirror of the broader economy. Investors want to know exactly how high interest rates are affecting these banks' profits. Are consumers still paying their loans on time? Is lending activity slowing down? The answers we get this week from these financial giants will give us a much clearer picture of where the U.S. economy really stands. Now let's talk about one of the hottest sectors on the planet right now: semiconductors. This week, the Taiwanese giant TSMC will release its earnings, and the whole market will be watching closely. The semiconductor sector continues to be one of the biggest engines behind the stock market rally, largely thanks to the massive investments pouring into artificial intelligence. Companies like NVIDIA and Broadcom remain some of the most closely watched names on Wall Street. If TSMC delivers strong numbers, it could send a wave of confidence through the entire tech sector. If not, it could raise some serious questions about whether the AI boom is starting to slow down. Let's shift to energy. Oil prices actually pulled back this week after some initial concerns about possible supply disruptions linked to tensions in the Middle East. This drop in oil prices is actually good news for the broader economy because it helps ease some of the pressure on global inflation. Remember, energy costs affect almost everything: transportation, manufacturing, even the price of the food on your table. So when oil prices go down, it can give central banks a little more breathing room when it comes to fighting inflation. Now, despite ongoing tensions involving Iran and the United States, global markets have shown a surprising amount of resistance this week. Stocks didn't panic, and volatility stayed relatively controlled. That said, investors are not letting their guard down. Any new escalation in this region could quickly affect oil prices, inflation, and stock markets all at once. This is one of those situations we need to keep monitoring closely because geopolitical risk can change the entire economic outlook overnight. Here's some encouraging news. Economists have actually lowered their expectations of a recession in the United States. The current outlook points toward moderate economic growth throughout 2026. However, there's a catch. Inflation is still running above the Federal Reserve's target. So while a recession looks less likely right now, we're not completely out of the woods either. It's a delicate balance between keeping the economy growing and getting inflation fully under control. And finally, let's talk about gold. Gold continues to be one of the most sought-after assets for investors looking to protect themselves against geopolitical risk and economic uncertainty. This is a pattern we see time and time again. Whenever global tensions rise, investors start moving part of their capital into assets considered safer, and gold has always been at the top of that list. As long as uncertainty remains high, whether it's from the Middle East, inflation, or interest rate decisions, gold will likely continue attracting attention from investors around the world. And that wraps up this week's global economy update here on the Freedom Escape. To summarize, stocks are strong but cautious. Inflation data is the next big catalyst. Earnings season is kicking off with the big banks. Chip companies remain the market's engine. Oil is easing inflation pressure. The Middle East remains a risk to watch. Recession fears are fading, and gold continues to shine as the go-to safe haven. If you found this video helpful, do us a huge favor and subscribe to the channel. We're still growing, and every single subscriber makes a real difference in helping us build this community. Remember, we're posting multiple videos every week, so turn on notifications so you never miss an update. Thanks for watching, and we'll see you in the next one.